Unemployment's up again. The stock market has been coming down this week over the last 2 days, over 1,000 points, the Dow Jones. Unemployment earlier this year, 3.5, now about 4.3. What do? We've got unemployment going up. We have interest rates incredibly high compared to the last 10 years. And we've got GDP, which is the gross domestic product, how productive our country is in terms of goods and services, going down. Those three things are going in the wrong direction. So what do? What can you do? The sky's falling. Well, dollar is dead. I do this 3 days a week, Monday, Wednesday, Friday, help you get out of debt, help you watch interest rates. But every Friday we go over what you can do to mimic what the wealthy do. Why is it that even in bad times they're still doing well? It's because they don't hold on to dollars. They hold on to assets. Over the last 100 years, the dollar has gone down 99%. It's lost that much value. Over the last just 5 years, the dollar is now worth 78 cents. So whatever you've been saving for the last 5 years has gone down significantly in terms of what it can buy because of inflation. If you invested that in the S&P 500, you can just buy an ETF, your dollar would be worth $2.14. Okay, so you'll see videos in the description link below about creating an emergency savings, making sure you do have some cash in case you were to lose your job. There's also a video on how to make that last as long as possible. So the first thing you can do is plan. Plan for the unfortunate event that you or a family member may lose their job. To give you an idea, 3.5% unemployment to 3.6, 0.1%. You might think that's not a lot. Well, simple math. If you have 160 million people in the workforce, 0.01% means that 160,000 people just lost their job. So 3.5 to 4.3 is 0.8%. That 8 times 160,000 is like 1.2 million people from the beginning of the year till now lost their job. It could be more, it could be less. It just gives you an idea. While 0.1% does not sound like a lot, it is. It's significant. So what's going to happen this year? First thing, like I said, you want to plan, make sure you have emergency savings. But continue doing what you've been doing. Since February, I've been trying to help people get out of debt. Actually, since last year. It's been over a year. I've been making videos on the best ways to get out of credit card debt, you name it. If you have $200, $300, $400, $500, $600, $800 a month in payments on whatever it is, once those go away, either that money becomes available for you to do something else with, like invest, or it just decreases your monthly expenses, meaning you can last longer on less money. The other thing we do, and this is what we do every Friday, is to show you the alternatives to the dollar, and that's what I'm going to go over now. What are the alternatives? Well, other investments. So let's look at savings, checking, treasuries. Once a month, those numbers come out. They really haven't changed much. You see them here, 0.5 to 5%, not a big deal. Not a big difference, because if you look down lower, you'll see inflation is still over 3%. So you're barely beating inflation even with a treasury. But those are cash or cash equivalents. Now, most importantly, look down here. It comes to commodities. Gold, silver, Bitcoin, and Ethereum are crypto-based, but they're looked at as stores of value, meaning in times of inflation, people like to buy these assets because they believe they go up in value over time. And that way, instead of losing value like a dollar, they're gaining value in assets. Look at gold. Earlier this year, just over 2,000, now 2,475. Okay, 500 point rise almost. Let's say 400 on $2,000 is 20%. Your money didn't go up 20%, it went down. Silver, 22.88, 28.99. Bitcoin, 43,000 to 65. Ethereum, 22 to 3170. So if you had bought some of those assets, then your dollars would be gaining value just like the rich do. There are what's called ETFs. I've got videos on those, on how you can easily buy gold and silver without buying the physical gold and silver. You can buy and sell it through a brokerage like T. Rowe, Schwab, Fidelity. Let's look at the Dow Jones. Now, in the last 2 days, it's dropped 1,000 points. We got to keep an eye on that because it looks like the economy is not doing great and it could be getting worse. So I wouldn't be surprised if the Dow Jones and the S&P 500 continue to drop between now and possibly the end of the year, if not into next year. And the 16, 18-year cycle looks like 2026 may not be that great. Dow Jones 38,654, it's still up, even though it went down 1,000 points since the beginning of the year, 39,945. S&P 49.58 is still at 53.74. It's up as well. Now, at the bottom here, note, 2-year and 10-year Treasury. That's how much is being paid by the federal government on the money they borrow from you. The 2-year and the 10-year. The 2-year is a shorter period of time. It should be lower than the 10-year, right? You lock your money up for a longer period of time. The 10-year should be higher than the 2, but it's not. As you see there, I show that it's inverted. Inverted means we are in a recession. I've been saying this since the beginning of the year. So what you're seeing in the news does not surprise me. Unemployment up? I'm not surprised. Inflation continuing to go up? I'm not surprised. Why? Because we've been in a recession, in my opinion, for quite a while. 10-year is at 3.8. It dropped significantly since the beginning of the year. 2-year, 3.9, significantly since the beginning of the year. So what does this all mean? And I've added here unemployment. In February it was around 3.9, but within the last year it was around 3.5, which is what it was before we had the COVID. And now we're all the way up to 4.3. So what does this all mean? Well, on the one hand, the point of this Friday show is to show you that what I'm doing and what I've been doing for a long time is diversifying into various assets instead of just holding cash. I have cash for transactional, for emergency funds, over and above that. Of course, there's stocks and other things, and there's 401k and savings. But instead of holding on to additional cash savings, I put it in usually every 2 weeks, buying a little gold, a little silver, Bitcoin, Ethereum, commodities. You can buy ETFs like the S&P 500 and that sort of thing. Now, that's money, of course, that you may not need in the next month or 3 or 6 or year or 2, because it can go up, it can go down. It's cyclical. I always have to say, this is informational purposes only. Don't do what I do. However, keep an eye on what the rich do, because they buy assets. They don't hold dollars. And if we continue to have problems and go into recession, and we continue to have high inflation, the dollar will be losing its value even faster. You don't want to be on the wrong side of this. The dollar has always gone down. Gold has always gone up. Silver has always gone up. The Dow Jones has always gone up. The S&P 500 has always gone up. Assets go up, particularly when there's inflation, because when there's inflation, assets are worth more. When there's inflation, the dollar's worth less. Keep an eye on that. Make sure you have your emergency savings. And let's keep an eye every week. Please subscribe. Do like the video. It gets it out to more people so that you can keep an eye on this basket of goods, as we say. And maybe you'll want to start diversifying as well. Have a great day. Thanks for watching.